Well, look at what we have here. We've got ourselves some rotation. So we're going to talk about that on today's Stock Market Brief show, where we navigate the financial markets through the lens of technical and inter-market analysis. If you haven't done so already, make sure to hit the thumbs up. It's greatly appreciated. I'm also going to be talking today about the 4 stocks that I just bought. If you managed to make the live stream, you probably already know those names. But if you didn't, that's okay. I'm going to be walking through those names individually and how I looked into the positioning aspect of it and why I got into those specific names. So let's go ahead and get into today's episode. Alrighty, people, welcome back to the show. Now, first and foremost, this is the heat map of the S&P 500. It's a quick way just to see what was sold off, what saw some bids. And what you're seeing here is, well, a lot of green, right? But there's a couple big red squares. And the big red one mainly to put a focus on is NVDA, arguably the most important name in the stock market. Maybe not the largest market cap name, but not by far. But it's definitely the highest implied volatility, which can really move the market. So much so that everything was basically up on the day for the most part, but semiconductors really took that big hit. If you look at the index watch tab here on Thinkorswim, this is basically an advanced decline line. It's showing the S&P 100, so 100 different tickers over here. And you'll notice that there was 70 advancing issues, 30 declining issues. So we had much more advancing names than declining. But look at the capital flows right over here, which I found to be very interesting. More money flowing out. And this makes sense, right? Because we've been talking about the divergences that have been taking place, how we've been seeing a lot of red there on the NASDAQ McClellan oscillator. And the NASDAQ McClellan oscillator was showing negative prints, but the market kept pressing higher on fewer and fewer names. So to see some of these names that have been beaten down start to catch a bid, well, that's makes a lot of sense. We also saw like a divergence in smart money versus the dumb money, and that kind of played out to the downside here. If you look at the indexes over here, the Dow ended up on the day. S&P 500 down about 30 basis points. It was the NASDAQ composite. And then the S&P 100, obviously, that we pointed out, and the NASDAQ 100, which took the brunt of the force, so down 1.15%. And if you look at the 11 sectors that make up the S&P 500, it's clear as day that there was a lot of green on the screen. But what led the way down? That was technology, down 2.45%, and consumer discretionary. So those risk-on assets were definitely coming off today, while people rotated into things like energy, which is a stock that we talked about not on last brief, but on the one prior. We talked about XLE, we talked about XOM and CVX as the tickers, and why we thought that we could see a bounce in those names. And we used intermarket analysis. We looked at oil next to the 10-year yield, and it gave us insight that we may see a bounce. And it just so happens we got that bounce. Okay, and utilities there and the consumer staples, which are typically more risk-off assets, those led the way in today's trading session to start the week off. What really brought down technology, because it wasn't all technology stocks that got hit, it was semiconductors, right, and electronic equipment. So if we look at the parts within here, the industries within tech, you can see semiconductors was down 4.83%, but we have stuff like renewable energy equipment, computer services, electronic components, and computer hardware. Those managed to hold into the green. So this week is going to be pretty important, especially for semiconductors. We do have Micron reporting, and we're looking at about 151% implied volatility going into that. Now it's on the 26th, I believe, so we have on Wednesday it is. But we're looking roughly right now at a $17 expected move, which means, we got to wait until we get closer to that date right before it happens. But $17 higher would be just right about these highs. $17 lower would be here. So a huge range of risk. And I would expect us to tag one of those levels coming into that earnings for Micron. NVIDIA's all the news. NVIDIA came down to a very key level today. That happens to be the lower weekly expected move. Saw a little bit of a bounce from it, pull back, and a bounce again. However, we closed underneath that near the lows of the trading session. There have been news about net insider selling taking place. And if you look at this chart by Sentiment Trader, it shows us the last time we rolled over where we started seeing more insider selling. It's a rolling 20-day sum. You can see we started to sell off. Even here when we had a spike, we consolidated, and then we started to see larger sums taking place there, which is interesting data. If we look at the 15-minute time frame, there's couple other interesting aspects I want to point out here on NVIDIA, because I know people are going to look to buy the dip, right? That's the first thing in everyone's mind. Okay, where should I buy? Because it's already off the highs by like 16% or something like that, right? A pretty significant move from 140 down to 118, okay? So first and foremost, we look at the lower weekly expected move. Okay, it's already down there. 2, this blue line over here is actually the earnings expected move from when we reported earnings, and price is basically right there. Now, it's a little dangerous to just buy this dip from where it's at now. However, if we do start reclaiming the week-to-day anchored view up, which is that line that I just drew there, so maybe cracking this high or cracking this high, and it starts showing strength, maybe that opens the door for a bounce to close the gap and retest the declining 5-day moving average. Other than that, I did talk a little bit more in detail specifically about NVIDIA, where we could look at a 50% retracement level and 61.8 since a prior run-up, but you'd have to go back and watch that or talk about that one on a different day. But as it stands right now, I'd be careful unless we could start crossing back up, and it might open the door for potential nice little bounce trade here in NVIDIA after coming off, like I said, quite hard and fast over here. It's very similar, right? We had this bearish engulfing candle on some erased volume. We did the same thing over here, and it kind of took a long time to consolidate this move. It lasted multiple months basically to here. And then we started rising again. So are we going to see something similar? Is it going to come down basically a 50% retracement level from here to here, which is like around this 100-ish area right around here? Maybe that might be the case. Maybe not. Maybe it takes a couple weeks to get there. Maybe it goes up. Maybe it comes back down. We'll see how that plays. But if you're trying to be strategic buying something like NVIDIA and buying the dip, right, I like to look at the lower time frames. And if you're trying to scale into a position, maybe the lower expected move makes sense there, maybe a little bit. Then next week, if we go down to the lower one, you can average in and try to buy small amounts to potentially catch, a rip your face off rally. But like I said, buying the dip without seeing the strength yet can be a dangerous game. So please make sure your position sizing is on point. Now, a stock that doesn't look nearly as bad from the last few days of trading, I should say, is AMD. So AMD actually has been consolidating these last couple of days. We saw a nice big move on this day, and then we've had 2 inside trading days here. So AMD might be one to potentially watch. It is still, it's above a declining 50-day moving average, and it's right there at about the 20 days. So I'd want to see this obviously break out, but I can see the case for if you buy in, you might have a stop at the low here and see if it, sets back up or something like that if you get stopped out. But AMD could be working out maybe potentially an early entry for a larger cupping type of pattern taking place maybe on like a weekly time frame or something. Now, that's just obviously speculative, but I am noticing the tighter price action here. It's going to capture the eyes of a lot of people, a lot of traders, and then they're going to look for these breakouts to take place. And if people are short the name and it starts breaking out, you got people that need to cover, which is buying back the stock. You got breakout traders, momentum traders. You have all the AI hype still, and people start to look to rotate back into these semiconductors. Okay, they lose their mojo right out of the gate, very quickly like this, and then people start to try to buy the dip really quickly, and sometimes they get obliterated, sometimes they get lucky. It's our job to really manage that risk, manage the position size, and kind of go from there. Okay, so those are some levels in some of those names. If we continue on, I want to look at the S&P 500 on the weekly time frame. This one has gotten quite extended. Past the weekly 5 EMA. And like we were down here when we said, when you get pretty extended from it, you can have snapbacks. Well, we sure as heck snap back and snap through. We got back down here, we snap back up, and this is a pretty extended move. So to come back to the weekly 5 EMA, which is around 5,400 on the SPX, that could make sense. This week, maybe not. Maybe next week, I'm not too sure. But as it stands right now, we're just kind of trading inside the prior trading week. I will note that also if you zoom out on the weekly time frame, we do have that negative divergence that is still building in the current context. That doesn't mean that it has to play out to some massive move to the downside, but it may resolve itself lower and might take itself some time to build back up and kind of go from there and see what happens. But I just want to call that out. We're extended from the 5 EMA, and we do have a little negative divergence in the weekly chart. Now, if we look at the daily chart, there's a couple levels I want you to pay attention to. We have the lower weekly EM and the upper weekly EM. This is what the market pricing as far as risk. And let me be quite frank here. It is a small expected move for the amount of data that we have coming out this week. Okay, there's a lot of different macro events. On top of that, we also have on Thursday, we have the political presidential debates. I think it's the first presidential debates. Okay, so this could bring in a lot of volatility to the market. Now, if the market wants to sell off, I 100% expect us to tag and do more than just a weekly expected move this week, meaning that we can tag it, we can come in and maybe even move off of it or whatever the case is, or come down to it, break it, and maybe try to come up, right? I expect to see more volatility than just a $6 move in the SPY or $6.50 move. So the lower weekly expected move, if that is going to come in contact, that is actually in confluence with a couple of things. One, the prior swing low that we came over here, that would be the anchored volume weighted average price is pretty in line with that, right at around 538. And then on top of that, slightly more below that at 536 is the gap fill from this gap up. And those levels, right, these confluence, they can potentially act as levels of support if you're trying to, like I said, buy the dip. So if we go into the 15-minute chart, I want to show you what that may look like. So going into tomorrow's trading session, we have a daily expected move down there at about 540, 545 up here to the higher end. We did have a pretty nice flush going into the close. And where did we close on? We closed where? The upper monthly expected move to the penny. All right, so it's always like when we were getting outside of it, we said the higher probability is to come back into the monthly expected move, blah, blah, blah. That's what happened last month, right? That's what we talked about, and that's what it's doing right now. Okay, last month we bounced from that level and we closed a little bit higher, but we're right there, literally to the penny. 542.65 is the upper monthly expected move. We're coming to the month end, so to trade around this level makes sense. It's fine if we close above it or slightly below it, but we're right there. Exactly the happy place that the market priced in for the month of June. Okay, we're below a 5-day moving average, but it is inclining right now. Okay, so that means this is bearish here, but it's bearish with caution. Okay, caution meaning that we can snap right back through this. We've seen that plenty of times. It's when this starts, turning over and declining. It presents itself. It basically says to be more cautious in the environment of a declining 5-day moving average over, obviously, an inclining 5-day moving average. Struggle getting that one out. If, like I said, we start breaking down further, the lower weekly expected move is at 538, and that's the gap fill right here that I talked about on the prior slide. If price wants to continue down through the weekly expected move, if that's going to be a potential area, that would be the level of confluence that I'd be saying pay attention to, at least, because those levels can bounce. If we were to come down there very quickly, say by tomorrow, the next day, or whatever, just be aware that the 5-day moving average would be flattening out to curling down, and any move that bounces back up, you want to proceed with caution, right? Because then if it gets above it, it could be bullish, but it's bullish with caution because it would be then declining, so we'd want to see that change. Okay, so the makings of potential changing market environment are starting to take place right now. This is what happens when you get below a 5-day moving average. However, we're above the gamma flip line, albeit that we're basically pinned right on it. Okay, so the gamma flip line currently at the market close was 54.50, and we're above that. And this is going to tell us how dealers hedge, right? So when they're below this line, below this kind of zone area, we can have selling into selling, buying into buying. You get crazy volatile price swings. Okay, so that's the time to be a little bit more cautious. It's when liquidity dries up, volatility typically increases. Okay, but we're above it, which means that dealers look to sell the rip, sell the dip. Sorry, sell the rip, buy the dip, sell the rip, buy the dip, sell the rip, buy the dip. This is where volatility goes down and liquidity increases. Okay, which tends to work out better for swing trading environments from my, from my experience. Being above a gamma flip line and being above a rising 5-day moving average is a little bit better for swing traders, for breakout traders more specifically. Okay, so those are some of the key levels in the market. We're starting to see subtle shifts, subtle changes, rotation taking place into many other names, right? And it's just like one stock that kind of pulled the market in, okay? So to recap that, be very careful buying the dip on NVDA, right? And other semis. We have Micron reporting here soon. If we start to see strength, there are opportunities in that realm, but we are seeing rotation. So this isn't like a full-on sell side kind of market right now, which gives the market hope, right? It doesn't mean it's the end times. We do have a lot of macro data, like I previously stated, coming out. So Tuesday, right, we get some S&P numbers. So tomorrow, right, at 6 a.m., at least I believe it's 6 a.m. I don't know if I have this correct, but we do have some S&P Case-Shiller home price numbers coming out, consumer confidence. Wednesday, the 26th, new home sales. So nothing crazy here. On Thursday, we get durable goods, GDP growth rate. And then on Friday, we get core PCE, personal income, personal spending. Okay. And then I said on Thursday too, we obviously have the debates, and there's some geopolitical stuff going on too right now. So there's just a lot of stuff going on to have such a small expected move, in my opinion. So that's why I really do expect us to be tagging those levels like I do most weeks, but this one was interesting to me. Now, all that stuff might be sounding somewhat bearish about things taking place, but there is interesting levels there on the book map. If I look at ES, right, the SPOOs, over here we have about 500 contracts almost, right, 450 contracts right at about 6,000. So there are some traders holding out up here over at 6,000. So the longer this stays here, which I'll keep an eye on as time proceeds, the longer this stays here, you know, the more likely it is that we eventually come to fill that level. It's not a guarantee, but if they remain there, right, and we have some demand step up, they're going to look to where the next level, the bigger level of supply is. And right now, that would be at 6,000, that big roundy right there on ES. Something interesting did take place today on Bitcoin, or technically at the start of the week or coming into Monday. We closed below the signal line over here, which is the rate of change between Bitcoin and gold. Today, we crossed below the week I can't remember if it was today or just early yesterday, but this right crossing below this is the signal, and then we got the trigger today on the Sailor to Shift tool. And since the trigger, we flushed from 63,000 roughly down to about 58,500. So we had a buy signal over here, and we saw a nice big move to the upside, and then it whipsawed us right back down. So this ended up being a false, well, I guess it was a true signal. It was a right signal, but the market whipsawed it back down. And if you're paying attention to this, if you track this, the sell trigger was spot on and would have saved you from a flush from 63,000 down to about 58.5. So pretty good move there, but I wanted to call us out because now I'm waiting once again for the next buy signal, right? What I found interesting about this last buy signal is Bitcoin and Ethereum moved up pretty nicely, but none of the crypto equities really moved along with it. It was like they held back, and that was a little concerning because I was really looking to trade those, and some of them I did trade, but it was like super quick because I got stopped out or I took profits very quickly. So now maybe on the next buy signal that opens the door back, but right now as it stands, we're on a sell signal, sell trigger. So I just sit back, I wait, and I watch. That's just how I kind of proceed. Speaking of, we talked about the NASDAQ McClellan oscillators. So the NYSE McClellan oscillator down here in the NYSE summation index. I did want to point out that we crossed above zero. So what do you notice about this, right? Price came in, we started to see a little bit move up. This is, part of that rotation, right? So as the market was down on the day, well, people started rotating into the names that got beaten down. So I do want to pay attention to this summation index to see if it starts to curl up here and the parabolic star ticks underneath it. And then even if the market's coming down a bit or whatever the case may be with the larger market cap names, this could be identifying a potential change in trend for smaller caps or, broader based markets to continue to rally. The last time we had a signal change was right here. It identified the potential change in trend. And since then, we've gone sideways to slightly down. Okay. And then the last buy turnover or potential change in trend was right here. And we did move up on that. Okay. So I am watching this one closely, which brings me into why I've entered into 4 new positions, and I'll walk you through my thought process there through these trade ideas. So first and foremost, I shared on Twitter my recent P&L curve. This is my Fidelity accounts. I have my Roth and my SEP. I trade those. And the last year, it's been crazy good, right? So this isn't always typical, obviously, but what has been happening is the market's been fairly easy to trade for the most part, right? I've been doing 2 things, right? I've been trying to press the market harder when we're above a rising 5-day and when we're in a positive gamma environment. And it's been working out very well. This last year, right, from June 20th down to June 20th. So I think I pulled this on Friday or whatever. So I'll have to update it. But, on my Roth, I'm up about 93%, and my cumulative return for the SEP is about 60% for my year. And then for year to date on this specific one, it's probably in the 30s or something like that from a year to date performance standpoint. Okay, but I'm showing my 1 year. So going into this, when I posted this, what I said was I'm basically a lot of cash, right? I was basically 80% cash at the time because I really kind of I took a big load off of my account just to kind of get a rest. Now today I entered into 4 new positions and I went over those on the live stream and I'll walk you through now just to get some exposure and the position sizing, right? I was very specific here because I'm like not a huge fan of this market environment in the current standings. All right, but there are names that are still setting up and I got to play them at an individual basis. So I took on about 4% positions, which is less than a full size. It's about a half size position for me in a couple of names, and I distribute it evenly, and they're pretty diverse for the most part. So the first one was CB. This is Chubb. Okay, we saw a nice gap up over here. I believe that was on some Warren Buffett news. Okay, I took my 4% position today, probably around the blue line, so I'm down, or maybe I'm up on this one. I can't remember exactly when I took it. My bad. But I'm in the position. I took it today. I'd say I'm flat to slightly down on all of these names because they moved down into the close. Okay, but I'm looking at this nice consolidation right here. It's not moving necessarily with the market, right? It's not as quite correlated. And we've had about 3 days trading tight here. So my idea is to have a starter position, like I said, and if it comes down to the here, that's about a 3% loss. Maybe even hold it into the 50-day if that's the case. And if we start seeing strength, I might try to build into a full-size position. Depends on what the market looks like at that time. And if we start breaking out and we start setting up again, I might even look to add at that point too. So it's a starter position for Chubb, CB. And one thing I was very clear with too, that I gave as an example was like, say if you're trading a 100K account, right? Just to make math simple, 100K account, and you take a 4% position, that would be using $4,000, right, of this. And basically what I said was if it fell 50% overnight, which I doubt it, right? Who knows? Like if something crazy happens, that means I would lose $2,000, right? I would lose $2,000, which means what? It means I would lose 2% of my portfolio on this one single trade. And then for the example, I did 4 trades, so I would have lost what 2, 4, 6, 8. So 8% of my portfolio, if that was the case on a 100,000 portfolio. Okay. So just to give you kind of an example, all I was doing here was just increasing exposure to around 40 to 50% of my portfolio. So I still have a pretty large cash position right now. And I'm looking to build in and add more. That's it. All right. I was doing some haircuts. So Berkshire Hathaway. Now Chubb is in Berkshire, apparently a small percentage. Which I didn't realize until I bought it. And I was like, oh yeah, I forgot. That's a Warren Buffett name. Or Warren Buffett bought into Chubb like right here or something like that, or they announced it. But Berkshire Hathaway is holding up rather strong. I think I entered in probably a little early, but it was on the breakout. It started breaking out of this downtrend line. We've had a nice move up. We've had a series of lower highs and higher lows. So the stop would be just down here, right? So if it continues up, awesome. If it comes and breaks down, I lose about 3% or so on the 4% position. So the idea here is to play the breakout continuation of Berkshire, obviously Berkshire B, right? Class B, because I can't just straight up buy a stock of the Berkshire A, right? It'd be too large of a position. Okay, so SRE, this is a utility name, and I like how utilities show some relative strength today. Now, SRE, Sempra Energy, this is in XLU, okay? So XLU, I believe it's like one of the top 5 holdings. And I looked at like SO, I looked at Duke, right? And then I think the top holding is NEE, right? And I looked at all of them and I was like, I kind of like how this one's setting up, okay? And it's just, a strong move like most utility names. And then we're seeing it contract and coil up right here. And we have the MACD starting to curl over. So my idea here is, once again, a stop trailing the 50-day and trying to play it back up for a breakout continuation. And if it does break out and it starts, setting up again, I may look to add to that position and pyramid into it. But that would be the name that I also started. And then this is a little different. This is Ralph Lauren, RL. Now, the really only reason here is because there's been a lot of retail names that have been looking pretty strong, and some, aren't actionable. Like we looked at some like TJX, and that thing's been straight up. Like, I'm not going to enter into that when it's straight up. I prefer to see a consolidation, and Ralph Lauren stuck out because it's still in a consolidation phase. This and actually also GPS. So GPS is the gap. That one, is flagging pretty nicely, but this one's consolidating pretty much right at around this 190. Maybe you can call this a little cup with handle right here. So I'd be looking for potentially breakout to 190 and look for a continuation there too as well. And if it breaks down through this 180, then I'm basically out, and I'll look to see if it resets back up at that point. But those would be the names. And by the way, we looked at a lot of names today in the live stream, and there's still a lot more that we can go over. I even think like VLTO. There's so many different names right now that look like good setups and potentially can see some rotation into. So I'm starting to slowly build back in to a stronger position in the markets. And if I am wrong about that, then I can get stopped out for a little bit of money. And my P&L curve, the goal would be to keep it obviously consolidating sideways or pull in a little bit before the market conditions change back. And I'm off to, the races again. That's all I got for you on today's Stock Market Brief Show. Hope it helped out everybody, gave you some insights to the markets, my portfolio stuff, kind of how I'm looking at it, and so forth. See you later.